feeling like homeownership is out of reach because you don't have a big down payment, or you're just tired of hearing save more when you're already doing everything that you can, this video might change everything for you. Because there's a little known loan option that lets you buy a home with no down payment, even if you're not using a VA or a USDA loan. So in this video, I'm going to break down everything that you need to know. What is this 100% loan option? Who qualifies? What lenders are looking for? And how one of my clients bought a home with almost zero out-of-pocket expenses, and how to find these programs where you live so that you can stop renting and finally buy your first home. Now let's get into it. So first off, it's really important that you understand how these programs work and how they're designed so that you yourself can make an informed decision up front if this is going to be a right fit for you, and so you don't get screwed at the end of the day. So how it works is they're going to give you the money for the down payment. And a lot of times these programs are used with either an FHA loan or a conventional loan. And here's how it works. So let's say you're buying a house for easy math, $100,000. The minimum down payment on an FHA loan that's required is 3.5% of the purchase price. So in this case, the down payment that's required is going to be $3,500. Now, this is where you can get a grant or down payment assistance programs to cover this down payment. But here's a mistake that I see a lot of home buyers making is they think that the down payment or the grant program is the entire loan itself. And again, no, this is used with either an FHA or a conventional loan. And a tip that I always tell people, make sure that you understand what the fine print of is the grant or the down payment assistance so that you understand up front what you're getting into so you're not getting screwed at the end of the day. Now let's go over the FHA 100% financing grant. So this loan goes by a few different names depending on the lender, but essentially it's an FHA mortgage with 100% financing, meaning there's no down payment that's required. And an FHA loan is a government loan. And what they're going to do is the bank is going to give you 3.5% to cover the required down payment. And with this particular loan, they're going to give it to you in a forgivable grant that's starting from day one. So this is important to note. Now, the requirements, at least one person on the loan must be a first-time home buyer. And how it's going to work is they're going to give you a higher interest rate up front. It's normally about 1% higher up front, but a good strategy is use this money to get into the house. Then, since it's forgivable starting day one and you don't have to repay it back, refinance afterwards to a lower rate to get your mortgage payment lower. And that's a good strategy to use with this FHA grant. So here are the requirements for the FHA grant. So the minimum credit score is going to be a 620. They're also going to want to see that you have stable and consistent income. So they're going to want to see that you've had a 2-year work history. Now this 2-year work history doesn't need to be in the same job, doesn't even need to be in the same line of field, just as long as you have had a job for the last 2 years. They're also going to cap you at what's called a 50% debt to income ratio, which means 50% of your monthly income gets capped to go towards your monthly debt. This also includes the future mortgage payment as well. And at least one person that's going to be on the loan needs to be a first-time home buyer. So not everyone needs to be a first-time home buyer, just one person. Now, a mistake that I see a lot of people making when it comes to these types of programs is they assume that you don't need any money at all saved up when using one of these programs, and this is not the case. One, you have closing costs, and two, a lot of times the banks want to make sure that you have money left over after everything is done so that you have money to pay for the mortgage payment. Normally they want at least like 1 to 2 months of a mortgage payment saved up. Now, a tip that I tell a lot of viewers to make is you can actually ask the seller to cover these closing costs, and you can use like your 401k or stocks or whatever the case may be to cover the reserves that are required. Now let's go over more state and local programs. Besides the FHA grant that we just went over, there are so many different national, state, and local programs that are out there available to you right now, and here's just a few. You have the Chenoa Fund, you have NACA, you have state programs like the Florida Hometown Heroes, you have the California State Bond. Pretty much what you want to do is just Google any first-time homebuyer programs that are in your area, and that will come up with a list. And the best way to apply for these programs is to use a mortgage broker, because they're going to have the most access and also the most flexibility when it comes to finding these loan programs and helping you out with them. And all of them are pretty much designed to help first-time home buyers specifically with the down payment. And where they kind of differ in a couple of key aspects. Some have different types of income limits. Some have different limits when it comes to the area, and they all are different when it comes to, is that going to be a forgivable program or not? And there's key questions that you want to make sure that you know up front so that you do not get screwed with one of these programs. And before we go into that, if you're planning to buy a house in 2025, make sure you hit that subscribe button so you get notified every time I put a video out. So it's really important that you understand what happens to the money that's been given to you for the down payment after you close. Does that money need to get paid back? And I see a lot of people get screwed in this way because they don't understand what they're getting into up front. There's really 4 major categories that all the down payment assistance programs fall under. One, it could be an actual grant where there's no payback required and they're actually going to put this in writing on the closing documents. Number 2, it might be forgivable, but after a certain period of time. A lot of times you'll see programs, it will turn forgivable once you've lived in the home for anywhere from 5 to 10 years. And if you sell or refinance before that time period, that money needs to get repaid back in full. Then you also see it as a small loan where you're making small monthly payments toward the money that they've given you for that down payment. And then a lot of times you'll see that it has to get repaid back in full if you ever sell or refinance the house. Now let's go over the pros and cons of taking a down payment program. So overall, here are some of the pros and cons. So number 1, the pros are, of course, there's no down payment. So you're able to save for either repairs for the house or emergencies a lot easier. This is also a good option for those that can't qualify for doing a VA home loan, which is only for those that are in the military, or those that are using a USDA loan, which is only for homes outside of the city limits, like very far in the country. And here are some of the cons. Now, you might get a higher interest rate when using one of these programs. A lot of times they have stricter underwriting and guidelines when it comes to getting one of these programs. And you also, overall, it's hard to use this when buying a new construction home. The reason is a lot of times that builder wants you to only use their lender and you're kind of stuck with whatever programs that they're offering. Now let's go over a real life scenario of how a person used these programs to buy a house with very minimal out-of-pocket expenses. Okay, so here's a real life scenario of how one of my buyers utilized the FHA grant to their advantage. So they bought a house for around $300,000. The grant gave them $10,500 to cover the minimum down payment that's required. Then they were able to get a seller credit and they were able to get the seller to pay $15,000 to cover all of their closing costs. Now this strategy worked out the best because they bought a home that had been sitting on the market and the seller was really motivated to sell. Now because they got a seller credit to cover the closing costs and they got the grant to cover the down payment, their cash to close, what was needed to buy the house was around $1,000. And what they ended up doing is that money that they were going to use for the down payment, the $10,000, they actually used it for repairs, bringing the house up to their standards, what they wanted to be at. And our overall plan is to refinance them later on down the road to a lower payment. And because it's forgivable, so they do not have to repay back this $10,500 that the grant gave them, we're able to do what's called an FHA streamline refinance, which is a very simple refinance as long as we're lowering the payment where they don't need to look at any income documents, no appraisal required as well. So here's how to apply and get one of these programs. So you want to work with an actual mortgage broker because generally speaking, they have access to the most loan options and they're the most flexible. You're going to apply directly with them. They're going to pre-approve you and they're going to be the person that's actually going to be getting you these programs or the grant programs. And they're going to find you the best loan option and the best program that's very specific to your scenario. Now, if you enjoyed this video, you're going to love the one that I just posted on if you should do an FHA loan or if you should wait it out, and I'll see you on the next one.